about Zimbabwe-style hyperinflation in North America?
Well, Germany in 1920, early 20s, or Germany was one of the biggest in terms of economic activity, one of the biggest country in the world, and yet they went through hyperinflation. So, I don't want to say it's 100% for sure, but the potential for even the U.S. to go through hyperinflation is very possible. If you run deficits of 13, 14% of GDP, and you're running for so many decades, massive budget, also trade deficits, the world owns U.S. China owns something like $1 trillion of U.S. assets, if not more, and bonds, and Russia has lots of money as well. At the end of the day, this is still possible.
Let's talk about. It's great that you brought up China a couple of times. Is your thesis limited to North America and the G8, and are emerging markets actually safe from this, or do you think this is something that's going to be around the world?
Yeah. Well, the countries are in let's say financially, the countries that have the worst situation are actually the G8.
Sure.
Japan has close to 200% of debt to GDP. There's other countries in Europe that their debt is very high. Their deficits are very high. So G8, the developed world, is in worse situation. The emerging markets, though, because they export so much to the G8 countries, they have therefore to be, impacted whenever the developed world gets hurt big time. So, but their situation is not as dire as because they don't have that much debt, right? They never became rich. They never spent over their, their income for the most part, and anyway. So, and they have a lot of work ethics. Chinese, for example, they work 12 hours a day, 7 days a week. People work hard. They save. In Asia, saving rate is 20 to 30%. So if you save a lot of money, it's hard to go bankrupt.
And ironically, I had this conversation with my dentist, believe it or not, the other day. We were talking about this, where the Chinese, it would be a much smaller shock for the Chinese, who aren't used, for the most part, the entire population, aren't used to a high luxurious lifestyle and could easily pare back their lifestyle. But the shock effect in North America and the G8 would be substantially greater, I believe, because you have people who are just used to having luxuries at their fingertips, and you take those away, and I think you get a population of some pretty lost people, no?
Yeah. But bottom line is the G8 countries, the developed world, where people have to just basically spend within their means, and that includes governments, just not individuals, but the societies of the developed world have to cut their spending and make levels of spending which are appropriate versus their income.
All right, let's do a little rapid fire and go through a couple of things I want to talk about. Oil. What happens to oil, or is oil just going to play ping pong? Inflation, deflation, inflation, deflation, and it goes up and down. A couple of years ago, when you're on the AGORACOM blog, oil was trading in the $70, $80 range, and when everyone was talking about $100 oil, you're actually talking about $200 oil. It didn't quite get there, but it got a lot closer than people ever believed. So you had your pulse on oil. What does oil do here?
Yeah, but oil, I would put oil. There's two aspects of oil. The first aspect, it is a commodity. It's a oil commodity that everybody uses every day. Every time you consume oil, it's burned, it's gone forever, which is not necessarily true for some other commodities like copper. It's not even true for as well for gold. So you consume it, it's gone forever. So, but because it's still a commodity, I believe it will go in the theme that I just mentioned. When deflation looks like it's winning, oil price will go down, and when inflation looks like it's winning, oil will go up. But further to that trend, you have tremendous forces at work on oil, which is demand increase from Asia and massive supply issues around the world. The cost to produce oil, is going up, and over time, and also the quantity of oil found every year is declining. So basically, you've got to squeeze supply and demand. So there's a tremendous force here upward for the price of oil in the long term.
So even though demand from countries like China may be cut as world economic growth slows, if the G8 can't buy products from China, that means China won't have to produce as much stuff, which means they'll have less demand for oil. But you're saying that alone is not enough to stop the other factors, to offset the other factors that look bullish for oil?
Yeah, personally, I think that oil, because of that supply and demand squeeze over the long term. So when in 2008 demand went down sharply, I mean, oil price went down sharply, but that's a short-term move. And now oil is back to close to 80 again. And, you know, if you just think 5 or 6 years ago, $25, $30 oil was considered a very high price. Sure. I mean, we're at 80, and we're still not really out of this big recession. I mean, we're slowly recovering from this huge recession we had last year, and yet oil is close to $80, which would have been unthinkable 5, 6 years ago. So we have a long-term trend upward on oil. There's no doubt in my mind. In fact, it's my favorite commodity, let's say, for the long term.
All right.
And it's certainly something to watch for investors, in my view.
What do you see as your upper and lower range for oil? Is the upper range 150 and the lower range in the $50, $55 range, or even the low as $35 where we got a few months ago? What do you see as the range during this inflationary deflationary cycle that you're predicting?
Well, we saw the price last year. It went to low 30s. And when we see the next round, let's say the third round and it's a round of where deflation is winning, I think oil will go down from the current price of $78, $79, but I don't think it will go to the low of 2008. So maybe the next low is $50. It's hard to really pinpoint a price, but I think every round the lows will be higher and the highs will be higher. So and ultimately we'll break the $150 that we hit in July 2008. Mm-hmm. And we'll go to 200.
Any kind of timeline that you think, is that the next couple of years is inevitable, or next 3 years, 5 years? Do you have any sense for that?
When the economy was booming, I would have said it would probably happen soon. But now that I believe that the world will go through very difficult times economic-wise, so the growth will be very low when times are actually good, and we'll go back to recessions on a regular basis. That's why I think the demand is not going to increase as much as the past. So let's say my target for oil, I think it could take 5 years before it gets to 200, but ultimately it will get there, I believe.
Any other commodities that you like particularly? Maybe agriculture or base metals like copper. Anything else that you're particularly interested in or keen on?
I don't like the base metal still today. I mean, we've seen a major rally again. Like copper went from a low $1 something, 150 I think, and now it's 320. It's very close to its all-time high, despite still being a very weak economy around the world. And as I said before, every pound of copper is produced. It is somewhere. It's in a house, it's in a car, and those things can be recycled. So let's say my second best commodity, if we exclude gold here, because gold is its own category on itself, I would say agriculture. People need to eat. The population is growing. Arable land is shrinking slowly every year. So it's a long-term trend that is true. A lot of people have talked about it in the past, but those trends and those facts are still true and will remain true for our future.
And Jim Rogers, who you share some comparison with because you both seem to have retired from the business around the same age, Jim Rogers himself has been very bullish on agriculture now for a couple of years and keeps pounding the table on it. So it looks like you guys share that same thesis as well. Before we cut away, JF, any last thoughts? Maybe some we haven't covered you want to conclude the interview with?
Well, I mean, the most important point is for investors not to get too excited about bull market like we're now, and not too crazy and bearish when things are going down like last year. I mean, because we're not in a bull market that's just going to be booming and booming for 5 years in a row. I strongly believe that it's not going to happen. It's going to be rather up and down, up and down, and up and down, and investors should try to be unemotional about it. And when things are up, maybe they should wonder what they should do, and maybe they should wonder about maybe the investors should sell a little bit here and there and have some buying power if there is in fact another correction.
All right, and that's fantastic. I got to admit, that's not bad news for traders at the end of the day. Investors, at least they know that things aren't going to. It does, from the sounds of it, from what you're thinking, we're not going to get back to the Stone Ages. So there's going to be a definite opportunity for trading at least for the next 5 years on some pretty decent markets.
Yeah, that's personally what I hope. I expect that, and I hope it will happen because I'm ready for it.
Well, Jeff, I think I speak on behalf of everybody who's listening who thanks you for taking a peek out of your retirement. I hope you're enjoying that in order to share your outlook with everybody. I want to really thank you for being here. And I'm sure I won't put you on the spot and ask you, but I'm sure a lot of people are looking forward to, hopefully, may not ever happen, but hopefully some kind of a return where they'll see you back in the markets again and being a participant in some way, shape, or form. But thank you very much for being here. Thanks to everybody for listening in. This has been Jean-Francois Tardiff with George Cholis in the AGORACOM Online Gold and Commodities Conference. Looking forward to your comments. Thanks to all of you, and you can go ahead and post some questions, and JF either today or over the next couple of days will actually take the time to respond to you. Have a fantastic day. See you soon.
Thank you, George.